Let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
I just love that every time I hear it.
It's a great intro, man.
Like a boxing match.
That's right.
Hey, listen, I've been hearing a lot. I want to wait. Rates are going to get better. I want to wait. Rates are going to get better, then I'll buy.
Yep.
Or then I'll refinance. You were just looking up mortgage numbers and they're up like 9.5%.
Yeah. The number of people applying for mortgages, 9.2% week over week.
So that's week over week too. So that's a pretty strong number. That means a lot more people are feeling comfortable with getting back in the market, looking to buy or refinance. Now, I don't know how many of them are refinances, probably a bunch of them. Right. And I've been telling all my clients to get on my VIP watch list where other lenders are telling them to refi right now. My clients, I had 2 of them that didn't listen to me and they went to another lender and refied. And then they got my notification that now we're getting close to your call and they're going, I want to do it. Well, now it's not worth it for you to do it. You already refied. You got a better rate, but not near as good as I would have gotten you if you would have just been patient.
Yeah, sometimes
you had to do it now. They didn't. They believed their servicer or they got solicited by these. I mean, I'm getting things in the mail and on the internet every day to refi.
Oh, yeah. Yep.
Very.
And I'll tell you what, Bruce, the other thing I'll warn people about, I'm sure this isn't 100%, but there's a lot of misinformation on the internet where you go out and look, and I've seen people advertising low 5s, right? And then you dig into the rate, and it's really not that. And they're like, oh, no, that's not the rate. You get into it with those internet lenders that are out there through Lending Tree and companies like that are just aggregating a bunch of people. I don't want to paint them all as untrustworthy, but I haven't found one yet that I would trust.
Well, it's unfortunate because Lending Tree doesn't even lend money. They're just a warehouse where you pay them to advertise your product that they probably haven't vetted, right?
No, they haven't. No.
And the fact of the matter is that people may not know this, but really all lenders for your conventional FHA and VA should be pretty close to the same rate. Or else I'd tell you mine was the best. The fact of the matter is they're all mortgage-backed securities. So when one of them is considerably lower than what the competition's doing, you should be aware of that. Don't be foolish. Don't think that you're better just because it's you. And they'll tell you, oh, you have a 735 credit score, Mr. Johnson. You should refinance right now. Wait a minute. Just hold off for a minute. I'm the only lender I know out there that's saying, get on my list. I'll tell you when the strike rate is. So I created this refi list. And last week, I was telling everybody just to ask me if you wanted the VIP list. Now I'm telling you, now get all your documents in and let's get the application made. And they're like, well, what rate will I get? I don't know yet. I'm not ready to lock you in. I want to be able to strike the rate at the right time. And I want to show you something when it comes to the right time to buy or refi, because no one really knows. We can't time the market, right? So let's look at this bond chart. Now, we want these bonds to be up, okay? We want them to be up. So this was September, and that was the best time to refi that we've had since COVID. The best time, the best rate since COVID altogether. But if we look at this chart, that window of opportunity for somebody to get the best rate was 1 day at the best rate. You might have had maybe 10 days if you fell into that category right here.
At good rates, yeah.
At good rates. And those were when rates were 6.25. Here's the next one. That was a refi. You basically had 2 days. You had 2 days, maybe 4 if you count the ones down underneath it. 1 day. And then market literally tanked.
Yeah, that's a quick drop off right there.
That was a huge drop off. So these, we could call them opportunities, but rates were not as attractive. I really think this one, and look where we are now.
Yeah.
And it's been flat for about a week. So that was Monday of last week. This is today. And they've been up and down every day.
Pretty much the same, give or take a little bit.
But pretty flat, right?
Yeah.
So now some people may say, oh, Wednesday, the Fed's going to drop the Fed rate. This is what you got from the Fed rate. You're already seeing it. This is where it started, and this is where we are. You got the benefit.
What's the statement that they use in the stock market, right? It's buy the rumor, sell the news, right? It's
That's
the same
right.
thing, It's like when they announced they were going to do it, that was the time the rates dropped.
Absolutely 100% correct. The point is that none of us can time the market. We don't have a crystal ball. No. We don't know. The experts can't even really tell you, but the indicators should give you most of the signals. And right now is a wonderful buying, locking opportunity because we could easily see a reversal. Matter of fact, each of those buying opportunities, that was when the day before the Fed dropped the Fed rate. Every one of them.
Interesting.
And the best one was September when they dropped it a half a point. What do you think they're going to do on Wednesday?
Probably half a point, maybe three quarters.
And look how bad rates got after that.
Yeah.
The next two were quarter point increments. So if you think that when the Fed drops the Fed rate, it's going to be better for you, you might be surprised by that.
You probably will be surprised. And the other thing for everybody to consider, rates are certainly a massive factor in how much your mortgage is going to be, right?
Yes.
But at the same time, how much you pay for the house and what you have to pay out of pocket to get into the house also have an impact on your ability to buy, right?
Well, talk a little bit more about that. What advantages are there when the rates aren't the lowest they're going to be? Because
right now there's less buyers in the market. So you're competing as a buyer, you're competing against less people. A lot of really nice homes are sitting on the market for weeks, months, multiple months, right? And sellers get anxious. Even though traditionally 6 months is the norm, nobody accepts that anymore. We're wired.
6 months on the market?
Yeah, 6 months on the market is a balanced market, right? And people get scared on 6 days. I have sellers. What's going on? Why haven't I sold it yet?
I'm nervous after 35 days.
Yeah, those are some of the marks to look at. You have a seller that either has just dropped the price or hasn't chosen to drop the price yet at 30 days. That is a seller that you can get a deal from. So if you like the house, if it's good enough, if that's a house that meets your needs, that's where you can go in and get yourself a deal.
I agree.
And don't focus so much on getting the important, but first focus on getting your closing costs covered.
Closing costs, repairs, whatever.
More than half the houses that I've sold in the last 3 or 4 months, more than half of them got a brand new roof as part of the deal. And that was whether I was the buying agent or the selling agent, right? Whether I was the listing agent or the seller, the buyer's agent. We're getting new roofs on houses because insurance won't cover a house that has a 15.
The seller can't sell it if the buyer can't sell it for the insurance, right?
So we're figuring out how to get things done, right? And getting you into a house that not only isn't going to cost you a lot up front, but is going to save you money on maintenance over the first 3 to 5 years. Now, eventually stuff breaks and you have to fix stuff, right? So you can get in cheap, and later you can always, if the rates drop a point or 3/4 of a point, go ahead and refi. If not, as long as your rate is good enough for what you bought, be happy.
All right. So then tell our folks why waiting for rates to get much better is going to hurt them.
There's a lot of pent up demand in the market, but the people that have that demand, they're not out there shopping today. They're waiting for the crash, or they're waiting for prices to get better, or they're waiting for rates to get better. And if any of those things happen, those people pump into the market. As soon as they pump into the market, they start buying houses. And guess what? Demand is up, supply stays the same, prices stabilize, right? That's where you're not going to get that deal. You're not going to get them to cover closing costs.
They're not, because as soon as rates drop, the rest of the people that were waiting on the sidelines have jumped in. Now sellers have too many options. They got multiple people making an offer. They don't have to pay your stupid closing costs. So now for the investor that's putting 25, 30% down, they don't care. They can wait.
Yeah.
But for the first-time home buyer or for a buyer that's putting less than 20% down and doesn't mind waiving appraisal contingencies, not having a new roof, not having new plumbing, not getting any closing costs paid, they can wait. Well, go ahead, wait it out, see what happens.
Yep.
But if you need closing costs paid, you're going to be screwed if you wait for the rates to drop anymore.
Yeah, I think it used to be maybe 10 to 20% of my transactions had some closing cost assistance. Now it's in the 80 to 90% range.
I agree.
It's almost every deal.
I agree.
It's almost every deal.
Fate would have it, the ones that aren't getting the closing costs paid are the people that have dollars to put down. They're usually move up buyers or move down buyers, downsizing buyers, and they don't care about the closing costs. They're just they want to pump the seller for reduced cost.
That's what I was going to say, but then they're getting a reduction in cost. So
absolutely, because they don't need the closing costs paid. But the first-time home buyer can barely scrape up their 3.5% or 5%. They need closing costs paid.
Yep. Again, we're in the business of selling houses and originating mortgages, and that's great, right? We certainly want people to do that, but at the same time, I sell a lot of houses. I sell anywhere between 30 and 60 houses a year, right? And my goal is to get as many people into houses or happy with the houses that they have as I possibly can all the time. We had a nice event last week where we brought a bunch of our customers together, right? Had a little customer appreciation event. Yeah. And to see a lot of those people and talk to them, I haven't talked to them maybe in weeks or months. It's like, hey, how's it going? Oh, we love the house. It's great. It's fantastic. That's the kind of thing that just makes you feel good, that you're really, truly helping people. We make money doing this, but really helping people.
I certainly would never want my customers or your customers to think that we would try to persuade somebody to buy at any time to benefit us. And I hope that they don't. And I know that there probably is some people that think, these guys are just out to get another deal. The fact of the matter is I'm not. Or I wouldn't tell you to hold off on refinancing for rate reduction right now. I wouldn't tell you that's a bad business decision on my part. I'm not making the best business decision. That would be telling you now all the time.
I think you're making the best long-term business decision because you're honest and upfront with people and they can trust that.
That's why I do it.
That's
why I do it. This has been really helpful. I hope people understand that this is really an optimal time and that don't wait for the Fed to make the Fed cut to get in the market. Because if you look at the bond chart, it didn't work out for you the last 3 times, and it might not work out you on the 4th. Now, I do believe that we will probably see some better rates moving slowly into the first quarter of next year. We're expecting rate cuts, but remember, rate cuts don't mean rate cuts for mortgages.
Correct.
They're going to stimulate the stock market. They're going to tank the bond market. That's what's going to happen. So I want all the people that are watching this today to watch us again next week, and we'll see what happened after the Fed cut and see if we were accurate.
Oh, that's right. That's going to be an exciting one next week.
It'll be a good one. All right. You have a great day. See ya.